Howdy there, folks. Welcome into today's video. I got a lot to go through in this one here today. Stock market just tanked. I mean, absolutely tanked off a cliff in the last hour and a half of trading. It went from public count should have been, break even, maybe slightly green today, to next thing you know, we finished down $44,000 here today in the public count. So we're talking about go through what just happened, why it happened, where do things go from here, and a few other subjects. So appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed. I just want to jump straight into this, okay? So this is a chart of the Russell here today. I mean, the Russell Wilson just got absolutely wrecked in that last hour and a half of trading. I mean, that's the definition of off a cliff. Like literally the definition of off a cliff. I mean, just absolute tanking. This is the equal weight S&P 500, okay? Look at this baby. I mean, just that last hour and a half of trading, just off a cliff. We're looking at the Nasdaq down. Look at the Nasdaq. I mean, went from 15,062 there to finishing out at 14,700. And once again, that all transpired just in an hour or so, right? And what I saw out there today, and we'll look at a lot of stocks in this video, what I saw is a lot of the strongest stocks were the ones that got hit the hardest today, meaning essentially the stocks that had been performing the best were many of the worst performers here today. So the stocks that think about have been on fire for the last month or so, whoo, man, do those ones get hit. S&P 500 off a cliff. And here's another interesting thing about all this, okay, is if you look at all these indexes, right, look at the Dow today, look at the S&P 500, look at the Nasdaq. It's not just that it was off a cliff, right? Like I was pointing out before. Look at all these. Do you see something there? Do you see something? I hope you see something. What you should see when you look at this is that, guess what? We finished at the lows of the day for pretty much all the indexes across the board. They all finished at the lows of the day. That's a rough rescue, okay? Look at GSG today. That's something that's I like to see, okay? GSG down on a day like today. Crude oil was down. That's something I like to see on a day like today, right? There are some positive things that happen when you have down days, other than just, it's a buying the dip opportunity. It also gets into commodities lower. It's less of a tax on the consumer, You can push off recession, those sorts of things, right? If we take a peek at the dollar today, dollar was slightly up. So it's not like the dollar is really what tanked the market overall, right? Dollar was slightly up, but it really started to go up toward the end of market trading, so which kind of, is it the market going down that led the dollar up, or is it vice versa, right? If we go ahead and pull up TLT, it was a pretty good day for TLT overall. The VIX, look at the VIX today. That's how fast it happens, folks. One day where all of a sudden we have a tanking at the end of the market, and look at the VIX here today, up 10% plus. And really, guess where it all came? Right at the end of trading, right? And that's how quick it happens. If all of a sudden you get the market to tank in a short amount of time, woo, baby, that VIX spikes quickly. Look at the put to call ratio today, up 52%, folks. Whoa, huge move in the put to call ratio here today. My gosh. That's insane. It's literally like all of a sudden, like no one was interested in puts, and then all of a sudden everybody was interested in puts. Look at that change. My gosh. That's one of the biggest moves I've ever seen in the put to call ratio. 50% plus, literally in a day. That's one of the biggest moves I've ever seen, folks. Insane. Now, let's go ahead and look at some stocks. Oh boy, was it brutal. So we'll start out with stocks I personally own. Right? Look at Fubo. That baby just tanked. I mean, my gosh. And guess what? Fubo is one of those stocks that has been insanely strong over the past month, over the past few months. We pull up a 1 month chart of Fubo. Well, I guess it's not that strong in the 1 month, okay? The 3 month, it was at 14%. 6 month, 59%. Year to date on Fubo's 88%. But, these sorts of stocks that have been strong, woo, did they get wrecked. Elf on a Shelf, been incredibly strong this year. Stock, down 5+% here today, right? Pull up a year to date of Fubo. Of Elf. Elf's up 161% this year. But man, not today, folks. Tesla got hit hard. Tesla down 3.9%. Palantir got hit heavy. Oof, look at that drop in Tesla. Just woof. Look at Palantir here today, down about 4 percentage points. 1790 there. And finished almost at the lows of the day, 1725. Technically, the low was right about here, 1720. Shopify down nearly 4%. Wynn Resorts down 3.5%. Revolve down. Planet down 3%. 3% moves, right? Mattel down. Honest has been a super hot stock recently. And not today. You pull up a 1 month of this stock and we're at 96% gains. So that stock has been performing tremendous, but not today. Meta was my best stock here today. Meta surprisingly almost was up. And that gets into what we're going to look at in big tech here in just a moment, which was pretty shocking what I saw in big tech. What about safety stocks? You think, okay, stock market tanked big, going into the last hour or 2 of trading. So you would think safety stocks had to have done good on a day like today, right? Given that big market tanking there. Well, what happened with safety stocks? Let's look. Oh boy. It was Red Dead Redemption for almost all the safety stocks here today. General Mills down over 3.5%. Costco got hit about 2.5%. That's rare you see a Costco 2% plus move. Campbell's flipping flapjack and soup down big. Monster down. Coca-Cola down. Kraft Heinz down. Target down. SJM Smuckers down. Procter & Gamble, Pepsi, Clorox, Walmart, Kellogg, Kellanova. Even Mr. Softy got hit today. Safety stocks were not safety here today. If we look at my possible buys watch list, check this one out. Every single stock on my possible buys watch list was red today. Every single stock. SoFi's the one that got hit the hardest. That one was over a 6% downward move here today. HIMS was down 4.6%. The Hood's another perfect example. Think about stocks that have been hot. SoFi's been hot. HIMS been hot. Hood's been hot, right? And look at those stocks today. They got hit the hardest. Etsy got hit pretty hard today. Estee Lauder's been red hot the past month or so. That one got hit pretty hard today. I mean, it's 3% plus moves across the board. Alibaba's back to $73. I'm considering opening a position very soon. I can't wait for Nike's earnings tomorrow. Nike is reporting earnings after the bell tomorrow. Can't wait for that. It's going to give me a lot of intel on what's going on in China specifically. If we look at the 6 things I'm hedged against, I mean, those hedges all were definitely... let's call it insurance worthwhile today at least, right? Estelle was up big. Chipotle's down. Toll Brothers down. Apple down. Polaris down. Tesla down. So, yeah, obviously a good day if you got hedges on in the market. If we look at my AI stocks watch list, the worst stock of the bunch was actually Tesla here today at almost a 4% downward move. Palantir was down. AMD was down. NVIDIA down 3%. I might have to start, NVIDIA's calling my name, man. I might have to start an NVIDIA position here soon. We'll talk about Micron's earnings in just a minute. Those came out, and those are a little bit of a reflection of what's going on in NVIDIA's business model. Woo! Trade Desk down 2.8%. That one had been pretty hot recently. Oracle continues to just flounder around the $100 level, a little above 100. But look at the one stock that was green today, Google McDougal. And this is on the back of a report that supposedly Google's making money already from AI. So, I don't know, man. We'll see. That seems like more just a one-day kind of help out there. Google getting bailed out. If we look at the banking watch list here today, Deutsche Bank was the only one green here today. Everything else, Red Dead Redemption out there for the banking watch list. Big tech. Whoa, look at big tech here today. Micron, worst stock of the bunch, but it should be a nice green day for Micron tomorrow. And what stock will Micron likely move up tomorrow as well? The stock that Micron will likely move up tomorrow is NVIDIA. NVIDIA will likely be up tomorrow as well. Not a guarantee, certainly not a guarantee. You never know if we get some follow through, and we'll talk about follow through in just a moment. But Micron should have a good day tomorrow. It should have a good day. We'll talk about the earnings in just a moment. But big tech, only one stock was green today, Google McDougal. And the good thing with Google being green is it almost pulled Meta green today, right? Meta was hardly down 0.31%. So, if I have to say something good about the public count here today, the fact is the overwhelming biggest position in the public count is Meta, right? And Meta was hardly down today. So at least we got something that for us here today. My Cathie Wood watch list here today, oh boy, it was Red Dead Redemption out there, right? Cathie Wood, the ARC's been hot. ARC's been red hot recently. Really this whole year, but look at the ARC drop. I mean, this almost feels like what? It almost feels like algorithmic selling. When you see that sort of move, look at ARC this year, 67% gainer. It's destroying all the indexes. So Russell, Nasdaq, wrecking them all, wrecking the Qs. Cathie Wood is just, it's her year, right? It's her year. But man, what a drop today, though. Just pain. Commodities. Like I said, when you talk about a red market, There are some good things that come along with that other than just buying the dip opportunities. It's about commodities going lower, right? GSG, I love it when GSG is under 20. $20 is a key level to watch, right? If we can keep GSG under 22 this entire year, when I mean 2024, whoo, are we looking great for inflation. If we do see GSG ever spike back up to 25, 27, something like that, then we could be in trouble. Could get a second batch of inflation coming in ultimately 2025. So that's just something, keep an eye out for that, folks. Oil was down here today. WTI was down, so that's good to see. And not much green for commodities, right? Silver was up, but yeah, who cares? Lumber was up slightly today, right? And natural gas was up slightly. But look at natural gas. It's a joke. It's $2.67. I mean, that's insanely low for natural gas. So even a move like that doesn't really matter. The interesting thing I thought was Bitcoin was actually green today, right? 3% green. So I thought that was intriguing. This is going to shock you. Check this out, folks. Every single Dow 30 stock, Red Dead Redemption today. Every single one, not even one stock was green today in the entire Dow 30. And the best stock of the bunch was Mickey D's, McDonald's was down 0.6%. Worst of the bunch was Disney, down almost 3% here today. American Express got hit hard as well, right? Incredible. If we look at my ecom watch list, Red Dead Redemption out there, right? Affirm, Etsy, Shopify, eBay, Chewy, Amazon, all down. But you know one thing I will say, check out, you ready to be shocked. You're ready to have your flapjacks flipped. If you have not seen Affirm's year to date, get your diaper on, okay? Put your honest diaper on for a moment here and get ready to have your flapjacks flipped, okay? You ready to see it? Ready to see it? By the way, look at Affirm just tank, especially in that last hour and a half of trading. Ready to see Affirm's year to date? Check this out. Oh, what the heck? Why does it look so weird? Why does it look so weird? Stupid Trading View. What is this? What is this, Trading View? What happened? Anyways, Affirm's at a 400% gain year to date. 400% gain year to date. Insane, man. Absolutely insane. I don't know why Affirm's, year to date's not working there, but that's shocking. Okay, are all my stuff broken now? Is everything broken on my whole Trading View? Oh my gosh, okay. Etsy down big today, Shopify down, eBay down, Chewy down, Amazon was the best of the bunch, but that one was still down. Fintech, yeah, Fintech was a slaughterhouse. I called Fintech the slaughterhouse in the past, and it was a slaughterhouse. PayPal, if I recall, PayPal was actually having a good day at one point. I guess none of my charts work properly anymore, so that's kind of disappointing, but oh well, we'll deal with it. But PayPal was actually having a good day. I think PayPal was going to reach a new, let's call it recent high, but in this market, when it tanked the way it did, no hope there, right? Check this out. Every single stock on my housing watch list was red except for FICO. And my eyes went immediately, or when I was on Twitch and I pulled up my housing stocks watch list, my eyes went directly to one stock specific on here. And that stock is Enphase. My eyes went directly at Enphase here today. And the reason being is, Enphase has been extremely hot the past month, right? I mean, if we want to talk about Enphase, that stock was as cold as mold, pretty much this entire year until the past month. And the past month has gotten red hot. And then you look at a day like today, right? Gives up, at least a decent amount of those gains. The stock was down over $7 a share, down 5.4%. We already took a peek at my stocks. It was ugly out there. Oil and gas stocks, a lot of Red Dead Redemption for oil and gas stocks. If we look at semiconductors, it was Red Dead Redemption. But do keep in mind, Micron could potentially help all these guys out tomorrow on the semiconductor watch list. If we look at travel-related stocks, Red Dead Redemption, Airbnb down about 4% here today, Las Vegas Sands down, Wynn Resorts down, CCL down, MGM down, United Airlines down about 3% here today. I mean, Hawaiian Airlines was the only one that was up, but that one does have a merger situation going on, a buyout situation going on with Alaskan Airlines, so do keep that in mind. So the bottom line is the tanking was hard and it was heavy into the end of market trading there, right? Now, a few things in regards to this, okay? First thing is, we're due for something to happen here. The market has to break eventually, right? Dow was up 9 straight days. 9 straight days, we need a pullback. Dow does not go up every day. The stock market does not go up every day. We'd been rolling, right? The FedEx numbers last night definitely put a damper I think on today overall, when those numbers came out, FedEx missed on several key items, and that led a lot of people to kind of sour on the day overall because we really didn't have any big financial news come out other than FedEx. Now, on top of that, from what I'm also hearing, and this is in regards to the options market, what I also heard is, let's call it the market maker. The market maker hasn't been as happy recently with some of the things going on here. And also, I think simultaneously, you had a lot of people realize, crap, man, like, remember, a lot of Wall Street's playing short term, right? They're not playing these stocks for the next 5-10 years. They're playing these stocks for the next 5-10 days. Wall Street got way underexposed to put options specifically, right? And so I think as that market started to tank today, I think more and more people realize, crap, man, I'm off sides here. I got to get some protection. How do you get protection? There's a few different ways, but the easiest way is put options, right? And so all of a sudden, you have a massive influx of people buying puts left and right? It creates a huge selling dynamic in the market. People start getting fearful. They start getting scared. The market maker starts doing certain things when they see that much activity when it comes to people buying put options. So it can cause a whole different shift in dynamic. And the more you accelerate that, the more everything accelerates. The more the sell-off accelerates, the more puts being bought accelerates, the less calls being bought, which completely changes a lot of things in dynamics in the market. So I think that's a big factor of what, happened here today as well. But at the end of the day, folks, one way or another, you're going to get this pullback. One way or another, you're going to get this pullback, right? And I speak to you guys about what do I think is going to happen in Q1 of this year, right? I believe in Q1 of this year, we're going to likely see a nice pullback at some point in Q1. And it'll probably last maybe a few weeks, maybe a month. And they're going to blame it on something at that time. Maybe it'll be renewed recession fears. Maybe it'll be the Fed's not cutting. Maybe it will be inflation's going to stick around. Like, it's going to be something. They're going to blame it on something. Maybe it's geopolitical, whatever. They'll blame it on whatever. But believe me, there's a lot of these Wall Streeters are going to be looking to exit some of these positions in the short term. And it's going to cause probably a pretty big short-term sell-off at some point in Q1. Okay, and so that's just some food for thought there. Could create some interesting buying opportunities for people that maybe are looking to add some of these positions that are kind of like, man, they don't want to buy them up here and those sorts of things. But the big question is that coming more in January, February, or more March? My opinion is probably more in January, February that we get that big short-term sell-off at some point, and they'll blame it on something, right? Now, if you didn't get to catch this, I think this is really, really important. I actually talked about this in yesterday's video. I thought it was so important, right? Dow more than 10%. Down more than 10% like 2022, then up more than 10% like 2023. What happens next? Safe to say, don't expect another 25% year, but higher all 6 times, up 11.7% on average. It's another clue 2024 should be green for stocks. So I think it's important to kind of keep an eye out and you see a down day like we had today. Maybe tomorrow's down, which, by the way, before we go further on this, let me say this, okay? Tomorrow's trading action, I'm telling you guys, is extremely important. Extremely important tomorrow. If tomorrow is another red day, that is great news. And you may say, why is that great news if the stock market's red tomorrow after we just had a big downward day today? Listen, if the market's red tomorrow, that means we still got fear in this market. If people see the sell-off today and they say, crap, man, I'm getting a little worried. Yeah, maybe we reached too high a valuation. Maybe we got this. And they sell stocks tomorrow based upon what happened today, I would love that. That would be a really good sign. If tomorrow's a big bounce back day, that's a little scary. If you see all the 4 major indexes, the Dow, S&P, Nasdaq, and Russell, all green tomorrow, that's going to scare me a little bit. Because that means there's no fear in this market at all. At all. And you want to see some fear still in the market. As a bull, I like to see fear in the market. I want to see people still being concerned. I want to see people be like, crap, man, market went down. My stocks are down all of a sudden today. Maybe I should take some of these profits I made. That's healthy. I like to see a market like that. I like to see the Wall Streeters say, you know what, this has been a good run. It's time to cash out. I like to see that. That means there's fear. If you see green tomorrow in all the major indexes, that means there's no fear. No one's scared. And that causes me to actually be a little more concerned about what the drawdown could be in Q1. I'll put it like that, okay? So I would love tomorrow to see all 4 major indexes red. That would be extremely comforting to me, if anything, I could say that, okay? Now, once again, this is huge, and I showed this in yesterday's video. These are the other 6 time periods that basically what happened recently has happened in the past, right? Where you get negative 10% plus and then positive plus 10%, right? And, 1959, 8.5% return. 1964, 13% return. 1968, 7.7% return. 1976, what a year. Holy smokers, that's no joke. It's 19.1% return. S&P 500, and look at that. They came off of a 31% up number. My gosh. 2004, 9% up, which guess what? I've been telling you guys for the longest time, this period we've been going through reminds me very similar of coming out of the tech bubble. And I told you guys, I kind of feel like it's almost like a 2003, 2004 time period. And we could have one more blow off top situation in maybe housing over this next year or two. If mortgage rates drop and all of a sudden you get a FOMO in the market, who knows? And I'm like, maybe that big recession is still coming. It's just a few years from now, right? It's not like next year, as a lot of people are expecting. Like a lot of people are expecting the big recession to hit this year, right? Maybe it's a little pushed out here, right? We've never seen the type of stimulus pump in federal spending that we've really seen over the past few years, right? Which that in itself can push things out further than a lot of people anticipate. A lot further. It can push it several years out further than what people anticipate. Everybody thought 2023 we're doomed in the economy. You're going to see massive unemployment. 2024, a lot of people are still expecting the same thing. We could still get that place. It just might be a while. People are like in such a rush to make these things happen. It's like, do you understand what the Fed did, over the past few years? Do you understand what the federal spending has been like the past few years, right? 2010, 12.8% return, right? Which, no one even considers whether we're early stage cycle right now. No one even considers that maybe we're in 2010 right now. Or we're about to go into 2010. No one anticipates that maybe we're in a 2009 right now, right? 2023 was maybe 2009. It's just played out a lot different. If you look at consumer sentiment, small business sentiment, it's pretty much been worse this entire year than 2009. Keep that in mind. Literally, think about that for a moment. Look at small business confidence index in 2023 versus 2009. Look at consumer sentiment in 2023 versus 2009. And you'll likely find that they were actually been worse this year than back then. Just the one thing we don't have is super high unemployment, right? Like we had in 2009. But we've had a whole host of a bunch of other issues, including slice and dice inflation, including real wages that have been bad for a while that will likely, finally improve in 2024. So what's the return in 2024? Well, if it's anything like history, it's probably going to be somewhere roughly in there. It's not a for sure, right? But when you're batting 100%, that's a pretty good sign, at least, right? Now, Micron is going to be very impactful to this market because Micron came out after the bell. And I thought they were going to do pretty good, and they did really, really good. If you don't know Micron, they're a huge memory chip company, okay? Massive memory chip player, one of the biggest in the world. And they're the sort of company that you're going to look at and say, okay, how is the semiconductor industry doing? How are these AI chips really starting to sell or continue to sell? How's the smartphone industry, things like that. And so Micron reported they lost adjusted 95 cents, which was better than expected. And they did revenue of $4.73 billion, right? So analysts expected a loss of $1.01, so they came in, lost less money. And revenue was about $100 million stronger for this past quarter than what analysts were expecting as well, which is a bullish sign, obviously, right? $100 million is $100 million. Looking ahead, Micron expects second quarter revenue to be between $5.1 billion and $5.5 billion. So that's a $5.3 billion midpoint, right? The midpoint is way above the $4.99 billion that was expected. So let's say Micron's expecting 5.3 midpoint. Analysts were at about $5 billion. So basically Micron's expecting their business to be, let's call it $300 million stronger in revenue terms than what analysts were expected. That's very bullish. Also, Micron expecting much stronger, EPS on an adjusted basis as well versus what analysts were expecting. They're expecting 21 cents to 35 cent loss versus 62 cents prior to that, right? So that's a very positive signal for the overall semiconductor industry. Could be even a little bit of a positive signal for the economy as well. But that's something you definitely want to see, a company like a Micron come in and report better than expected numbers. They come in and report worse than expected numbers, you start to worry about demand for NVIDIA moving forward, which that's been the most important stock of 2023, right? it's very important we all keep an eye on NVIDIA and what's going on there. Obviously, all the smartphone players. I mean, Micron's memory chips go into almost everything nowadays. I mean, heck, dang, I don't know. Refrigerators have memory chips in some of them nowadays, and washing machines. I mean, it's insane, right? So, yeah, folks, that's what's going on there. As far as me staying focused, man. Name of the game. Continue to buy. I'll be buying stocks on Friday. If we do have any sort of big follow-through sell-off tomorrow, I might be making them little moves tomorrow, but I'll likely be making my moves on Friday, okay? All right, guys. By the way, I put together an entire workshop for you guys. If you didn't get a chance to check that out yet, I'll put it as a pinned comment down there. I recorded a 45-minute video for you this weekend when I had some time in my hands. Goes into exactly my investing game plan for 2024. You're hearing all this soft landing, hard landing, recession, no recession. It's a confusing time. So I said, let me put together my investing game plan for you guys for 2024 so you kind of at least understand from my point of view as somebody that's been in this money game for 15 years now, how I'm thinking about investing in the upcoming year, okay? Appreciate y'all joining me. As always, thanks so much for being here. Thank you for being subscribed. This might be one of the most timely videos I've ever got out in terms of when the market closed to actually getting it out. Appreciate y'all. Much love as always, and have a great day.